The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, as we take a look at how the markets wrapped up on the day Friday, not the best end of a trading week with plenty of red on the screen in the grains and the oil seeds, although bean oil did eke out a little bit of a gain on the day overall. But really, Friday session, kind of a downward move in the grain trade, while the livestock trade had an up day. We got plenty to take a look at here throughout the markets and what is happening, and get some perspective today from Naomi Blohm with Total Farm Marketing. Naomi, great to have you back on Market Talk. Thanks for joining us today. Hope you're doing well.
Yeah, thanks for having me. I'm happy to be here.
Well, let's just take a 1,000-foot view to start here in this grain and oilseed trade. As I mentioned, not the best end of the week. I guess to me, it felt like maybe some of this managed money was protecting some of its short position, possibly. We took a little profit maybe on Friday. Is that how you would view kind of the overall grain downward trade on Friday?
Well, I think that's part of it. There's a lot of stuff kind of going on here. So as you know, earlier in the week, prices tested and held major support levels. We had a nice recovery, bounce higher, corn able to climb up and clear that 450 number. Beans able to get up to the 1240 area with the March contract. But then we were up against the next level of resistance on the technical charts, and we ran out of friendly news. So what happened yesterday and today, we had numbers from Argentina saying that they're both their corn and bean crops just a little bit bigger. And then harvest really starting to begin with Brazil. So their cash prices were a little bit lower and just not any friendly news. And so we saw, again, just the sellers take over. And so now here we sit on a Friday. We're still range bound. We're still holding some major support areas, but boy, we are stuck for any kind of friendly news and just kind of wading through the weeds here, hoping for something friendly to come along to give this market a pop and maybe give the funds finally a reason to cover some of those short positions. So hopefully something comes soon.
Yeah, I agree with you. Just not a whole lot in the way of friendly, fresh news in this market. It's almost these markets, they feel like they maybe been building a base to some degree, but it also kind of makes me feel like we're back in holiday mode to a certain aspect because we just, like you said, we're stuck kind of range bound here, Naomi.
Yeah, I do agree with your sentiment of building a base. With as short as the funds are, they haven't historically gotten too much shorter. So they could, though, get short, stay short, and just sit on it for a while. That's the risk. Next week, though, I think the Fed meets. So we'll get some fresh news there in terms of when they would be potentially lowering those interest rates. Hopefully we get some commentary with that. But then as far as actual news, we're hoping we see more export sales. We're kind of hoping for bad weather to happen in South America in terms of corn production. Of course, as we all know, 75% of the Brazil corn crop, the safrinha crop, not yet planted. And between Argentina and Brazil both, all of that corn, there is demand for all of it. They don't have really big carryout from the year prior, specifically Argentina. So all of the corn that they grow is needed. So there's no room for a weather hiccup. So that's what we're watching weather-wise and news-wise. Seasonally, seasonals haven't totally worked, but seasonally, corn and beans both should, from a seasonal perspective, start to rally next week into Valentine's Day. So where there's hope for that. But again, we need some news to come along here and ignite it. But to your initial point, yeah, I do think we're building a base.
China has been in the news this week with their economic stimulus. And you mentioned, as we think about South American harvest, some of those prices in Brazil getting a bit cheaper, maybe to entice Chinese buyers there versus buying any US grain. But this whole economic stimulus situation in China, I know that's been a talking point in the market this week. Can you share your thoughts and perspective on how that's impacting things or not impacting things, Naomi?
I'm a little mixed on it, from the perspective of, China's needs to get their economy going. They need to keep things moving along here. So they're wanting to put stimulus in it so that, potentially we see some new demand. Now, the cattle market bid onto that news, and the cattle market said, hey, great, maybe we're going to see China come in and buy beef. But yet the grain market isn't really interested on it because the news of the Brazil crop still being big enough is weighing. And then also with China, now they're intentionally starting to reduce that hog herd. So if they're reducing the number of hogs, that's the less hogs that they're going to have on feed. So that's another aspect playing into it as well. So we'll keep an eye with China. We'll, again, look to see what our U.S. economy and the Fed meeting has to say next week as far as any signs of new life. Maybe with month end coming in, we see a reason for the funds to want to put some profits on the books and actually exit short positions so they have a profit to share. But yeah, the global economy is something continuing to watch. China, of course, the biggest factor in it right now.
I'd heard some talk that another issue in these markets, I believe, and I think this had more of an impact on the energy side, but it's having an impact on shipping around the world, as well as all the trouble in the Middle East and the Houthi rebels and the attacks in the Red Sea. It sounded like China is talking to Iran to try and get the Houthi rebels to kind of knock it off, so to speak. But I know there's a lot of geopolitical risk and a lot of shipping issues here. That's not a friendly news item to the market by any means, but it's something that is being talked about in the market as well. Your thoughts there?
Yeah, I thought it was pretty interesting that China said that. Essentially, it was like the big brother telling the little brother, knock it off. Like, we need the shippings to happen, or we're going to affect your economy from the standpoint, as far as how much oil China buys from Iran. So China stepping in and actually saying something I thought was pretty important. And we saw the crude oil market drop about $1 on that news earlier today, that there would maybe be hope that tensions simmer down over there because China stepped in. And that was part of the reason that wheat had sold off today as well, because there was initial hope that with the strife in the Red Sea region, that the United States wheat would then come into demand. And so that had pushed the market higher earlier this week. But then with China saying to Iran, knock it off, that's what made prices for the wheat market go down. So that is always continuing to be something to monitor. At any moment, the war with Israel and with Gaza Strip, everything is still, flaring up there. Things are not fixed, obviously, with Russia, Ukraine. So tensions always are something to be watching. Lately, though, it seems like some of that outside market news has just been more for day trading fodder. It just feels like we're ignoring the reality of war and what it can mean. And a war headline doesn't mean as much as it used to. But definitely something for short-term marketing and markets to watch is all of those global shenanigans happening everywhere.
Yeah, definitely. I couldn't agree more. And I wonder too, another thought that I've talked about with a few people here this past week, Naomi, is we have all this news out there, nothing really friendly to the market. But we also, I think some folks are starting to think about the U.S. acreage battle here already at the end of January. Is that something that you think is maybe starting to be a market conversation, or is it still a little early for that?
Well, it's starting to become a conversational piece. One industry analyst, had put out their numbers for the year, saying about 2 million less corn acres planted this spring than last year, and some more beans than last year. And the market, I think, is a little perplexed by all of it. And I have to say, when I was out in South Dakota in late November, and then also in December and in Iowa, and I was talking with producers there, and it was hard to get a handle or a pulse on what they were going to be doing for acres this year. I think the vast majority said they were going to be doing just the regular rotation. But in some places, it was definitively more beans. In other places, it was more corn. So I think it's going to be a point of contention and questioning going forward. I mean, we could lose 2 million acres of corn, and we're still going to be struggling with 2 billion bushel carryout. So that is just going to be hanging over the market, that notion of 2 billion bushel carryout, until either we see an uptick in demand or something bad has to happen in Brazil, or we need acres to be, maybe 4 million less than last year. So it is going to be something to be talking about. And then the next reason it's going to be something we talk about is because in February is that USDA Outlook Forum, where it's not a USDA report. It's like the third week of February. And that's when they come out and say, hey, these is our early projections for acres, and it's going to be record yield and everything's going to be fine. And then the market sinks lower on it. So you are going to hear a lot more about the acreage talk. And I don't really know that the industry has a good pulse on it. So we'll see.
We are having a conversation today with Naomi Bloom from Total Farm Marketing. And Naomi, to kind of wrap up our grain discussion here a little bit today, just some thoughts from you, and we could break this up by corn, beans, and wheat if we want to, but just some thoughts on risk management. I feel like just in general that folks have to be pretty smart here, sharpen their pencil, so to speak, in terms of their marketing plan as we're beginning a new year. We're looking at the South American supplies, et cetera, and just offer some thoughts for us on risk management here and what you want folks to remember right now in grains.
A few things. Be defensive until really proven otherwise. So what that means is have realistic expectations in terms of cash marketing and cash sales. And so if I had corn in the bin or beans in the bin, I would take a look at charts and put some realistic objectives as far as upside targets, like specifically March corn. If we could have a nice recovery bounce up to the 375 area, that used to be tremendous support. So now it's going to be resistance. So have some orders working with your elevator to get some cash sales moving at that level. That would also equate to December corn getting closer to that $5 level and have some open orders there working to make the cash sales. You could also have open orders working to buy puts, a $5 put. If we can see D's corn get back up to $5, a $5 put should be close to 38 cents. So you can have an open order working at those values. Same types of things with the soybeans, because the market is stuck on everything's going to be just fine. And that's the mentality that's killing us right now. There's no reason for the funds to exit those shorts. It'll take a dramatic weather issue to make that change. Something would probably happen at some point, in the summer on a weather scare or something like that. But just make sure you're pulling the trigger. The perception is that things are going to be good enough. The perception is that we have this 2 billion bushel carryout that's probably going to linger for corn for a couple years. So, remembering when we have a year or two of big bull markets, history has shown us that the 2 to 5 to 6 years after that, usually prices are not fantastic. So we have to start to set realistic expectations. But I really feel if we can get any kind of recovery bounce, have your orders working, because you know how it is. The market will be up there for just 5 minutes of one trading day. And if you don't have your orders in there ready to go, you're going to miss it. So that's my soapbox. There you go.
Well, to piggyback off that as well, and you can correct me if I'm wrong here, but I feel like, we always hear the old adage, high prices cure high prices, low prices cure low prices. But I feel like high prices cure high prices faster than low prices cure low prices. I mean, would you agree with that? I think this is a spot here where don't bury your head in the sand, so to speak, right?
Yeah. And you just kind of gave me a gut punch. Like it's very true. I hadn't thought of it that way, that the high prices, I mean, when they come, they're there only for short periods of time and then they go away, and it's harder to dig out of that when prices are lower. It takes a combination of a new demand market to come into place and some major global weather issues to turn things around. We're also dealing with an administration right now that is really trying to keep inflation lower. They're going to want to bring interest rates down. And so there is some reasoning, maybe potentially, why, the funds are waiting to see a cue from the Fed before they decide they're going to exit some of these short positions. So Keep it real, friends. You got to just keep it real this year.
I didn't mean to throw any body blows for you here today, Naomi. Let's segue over to talk some livestock here real quick. Cattle and the hog trade, really the whole protein sector as a whole.
Yeah.
Had some green on the screen to round out the week. Cattle specifically, you brought up cattle earlier when we were talking China. What's some thoughts for you in the fats and feeders overall here as we're looking towards the end of the month of January?
Yeah. Okay. So the biggest thing, there's actually a few. So we have on January 30th, 31st. So next week, Wednesday, is the cattle inventory report. And that's the big one. It comes out at 2:00. Heading into that report, the market now, when you look at live cattle charts, we've done a 50% correction from our highs in September to the recent lows. And we've bounced up and gained back half the value of what we had lost. So from a technical perspective, this might be as good as it gets. We had great cash news this week. So cash values had increased. Of course, the cold weather and the winter storm from a couple weeks ago was supportive to the market. Some of that's already priced in. We had good export sales this week, so that was definitely supportive. But now we're at the point of the market's probably going to be looking at this report next week, Wednesday, for its next big Q. Feeder cattle, same thing. Better news of cash. It has done a 50 to a 61% retracement for Fibonacci correction. So it's up there. RSI, we're getting to be overbought. Stochastic lines are starting to curve maybe into a sell signal. They're waiting for the report Wednesday. So we need some over-the-top bullish news on Wednesday to get the market to go significantly higher. If it's neutral news, we probably see the market maybe trade sideways then to a little bit lower afterwards. So think about where we've had a recovery bounce from. And even with cattle, it's kind of like grain. We had, a couple years of amazing cattle prices. We still have decent cattle prices overall. And granted, you can't rebuild a herd fast, but high prices in the cattle industry, when they're there, man, you got to capitalize on it because things can go away after that. Just if the perception at all is showing that the herd is trying to rebuild, that's going to weigh in the market next week. So I have not yet seen any pre-report estimates for the report yet, but that'll be something that the industry really will scour over Monday when they probably come out. But again, that report's Wednesday, so get prepared for it.
Yeah, good thoughts there. I haven't seen any pre-report estimates either, but great points and a lot to think about with that cattle trade here over the next couple of days. Naomi, I know you're up there in dairy country in Wisconsin. Any notes for us real quick in the dairy markets?
Well, it feels like that market may be trying to grind out a low here. We had a nice recovery day into the weekend with milk prices 20 to nearly 40 cents higher. This week we had the milk production report, and it showed that production was about 0.3% lower year over year. And so that was a little bit supportive because it is trending with lower production. But what we're keeping an eye on is going to be the export market. It's not as red hot as it had been years ago. And I think that's why we're also still seeing $16 milk. Not any big fresh news on the cheese front, not any big fresh news on the butter markets. So we're kind of stuck, but it kind of really feels like maybe we're putting in a low behind us and ready to look forward. If the dollar can work lower, that'll be, of course, great for dairy exports. And hopefully, I think the market's trying to bite on hope of China stimulus, meaning maybe China buys more dairy. They are a great customer from that capacity. So that's what the industry is going to be looking at in the coming weeks and months.
Number 3, China is on the dairy front for U.S. exports. I learned that today, by the way.
Oh, okay.
To wrap things up here, Naomi, final thoughts, anything you want to reiterate to folks here before we wrap it up today?
Well, just again, the sentiment of keep it real. The more producers I talk about with grain marketing, they are slow to engage. So they're either like, I don't know what to do, so I'm going to do nothing. Or, making time to have a very detailed conversation with them of what's changed and why. And now we have to maybe change our perspective of what prices can do, but how to be proactive about it and go back to our marketing toolbox from 2017, 18, and 19 when prices were a little bit slimmer, and remember how to do marketing with some of those other tools. So you're going to have a bounce here at some point, but just make sure you're ready to capitalize on it.
Well, Naomi, if folks have questions, want to have a conversation with you or the other folks on the team there at Total Farm Marketing, I know a phone call, online, a lot of ways to get in touch. How can they reach you guys?
Yeah, give us a call, 800-334-9779, and any of us are happy to help out.
Fantastic. And I know they could find you online as well, totalfarmmarketing.com. With that, Naomi Bloom, Senior Market Advisor at Total Farm Marketing. Always a pleasure. Thanks for joining us on Market Talk today. We'll have you back on again soon.
Sounds great. Thanks.
And that's going to do it for the show today. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.